Hi, and welcome to video 6 of the Financial Foundation set of courses. I'm really happy that you joined me today because this is a very important video where I am actually going to go through a step-by-step demo of how to do flow-based budgeting. It's the same type of budgeting that I work with clients on, or anyone that I'm working with budgeting on, how I kind of explain it to them and how we work it. And so hopefully after this video, you should be able to step away and begin this process yourself. So that's, an awesome experience for you. I commend you for, getting this far. And hopefully after this, you'll be able to do your own budgeting for years to come. Let's go. All right. I am Thinking Cap Financial. My name is Ryan DeRusso, and I am a fee-only financial advisor that primarily works with private practice owners and the self-employed. And I am excited to begin this process of really showing you how flow-based budgeting works. So let's get into it. What are we going to cover today? It's really simple. We're really just going to go through a demo of flow-based budgeting. For this, I use the tool Monarch Money. I'll explain why shortly, but I find it just be a very useful tool for flow-based budgeting. And then at the end of this, I'm also going to explain how you incorporate savings and debt repayments within the budget when using this, so we can actually move those very important expenditures in our life up to the top and really start methodically either saving for the long term or reducing those expenses or those debts that are holding us back. And then at the end of the video, I'll start talking about sort of what's next in the series of courses and in sort of managing your financial life. So let's get started. Before we do, make sure to follow that newsletter, thinkingcapfinancial.com/newsletter. More tips, more advice there. So please make sure to sign up there. You can find me on YouTube at Thinking Solo. I am on LinkedIn. My name, Ryan DeRusso. Make sure to share this course. We're building wealth together. We're creating wealth in the private practice space. Let's do this together. We need to move this from the back, basement out to the forefront. Personal finance, while personal, does not need to be hidden. So let's do this together. Beware, this is the most important video in this series. You please watch the whole thing so you can get a sense of how this works. I can't emphasize that enough. And then please watch in 2x speed. I sound much smarter that way. And then you can always go back as you're setting up your own flow-based budgeting and watch it at a slower speed if needed. Flow-based budgeting. So what is it? What we are doing is separating our expenses into 3 categories. We're creating a fixed expense, we're creating a flex expense, and we're creating a non-monthly expense. And what we will eventually want to do once we have developed the budget is have different bank accounts for each type of expense. So how I operate for my own personal expenses is I use my checking account for fixed expenses. I use my savings account for non-monthly expenses, and I use Flex or my credit card for the flex expenses. And so when I pay myself from my business into my personal accounts, I know exactly what amount needs to go in the fixed expense, what needs to go on the non-monthly expense, as well as what I can spend on my credit card to accurately match the flex expenses. And what this does over the long term is it creates parameters for my family and I for our spending. We know we're not overspending, but we're also not underspending. Instead, every dollar has a purpose, and that way, when we're moving forward, we can either adjust those purposes or keep it as is and make sure that we are reaching those long-term and life goals. In order to do this, however, I actually use a technology tool. It's called Monarch Money. Now, in my time as a financial planner, I was always agnostic about the technology that my clients used for budgeting. Essentially, I would teach this type of method, but it didn't really have a name, and I didn't really have a tool for the purpose. Then this kind of came around, and it was really good for me for 2 purposes. One, irrelevant to you, I actually can have insight into my clients' spending this way, so we can go in and look at the fixed expenses, flex expenses, non-monthly costs, and really evaluate are they on the right track and whatnot. So that's good from my perspective. But from your perspective, well, the other reason I really liked it is I could adjust the categories in a way that really track that flow-based budgeting style. And so what I'm going to show you now is first how to do that, and then how I set a budget based on that. And so essentially here's the dashboard, and you can find a sign up to Monarch in the video notes. But this is a demo. You're not seeing like real people's money or anything like that. And, accounts have been added. So checking accounts, savings accounts, those sorts of things. And what I'm going to then do is go into the budget, because that's what we're really talking about here. And what we're going to see is all the different budget lines: gifts, donations, auto, transport, housing, et cetera, et cetera, et cetera. And what we're going to do is change this around into that fixed, flex, and non-monthly cost dynamic. And so here I will click that tool. We will go to the categories section. And here is where we're going to make all those changes. And so what I do is I go to the housing section, and instead of labeling this as housing, this is now going to be labeled as fixed expenses. And then we're going to move things into that. But before I do, I'm going to actually change some other stuff. So we'll go down to the food section, and this is where we're going to do flex expenses. And these are like the variable expenses. And then we're going to go to travel and lifestyle, and we're going to change this to non-monthly expenses. Now, with that in place, we're going to move everything around into those three categories. We're not going to have anything outside of those three categories. And I'll show you the two outliers of that momentarily. So, garbage, fixed expense; water, fixed expense; gas and electric, fixed expense; internet, cable. We know that every month, fixed expense. If that's a business expense, you move that to the business category, which I'll show you shortly, and we're not tracking that here. This is only for personal expenses right now. We're then going to move the phone. Same with the phone. If it's a business expense, get rid of it. If it's a personal expense, move it to the fixed expense line. Home improvement. So how I evaluate home improvement is how do you typically spend home improvement? Because these things you need to move around based on how you actually spend. For me, we spend about once or twice a year, so I include that as a non-monthly expense. So there we have that category out. Now we're going to move up to the auto payment first, and so I'm going to move that to the fixed expense. I'm going to move the auto maintenance to the non-monthly expense, similar to the home improvement. That's how I view the auto maintenance. We're going to deal with it once or twice a year, but otherwise it's not like an every month type of thing. Public transit. I live in a place where there's very little public transit, and so it's really a flex cost for me because it's different every month. Gas, same. Parking and tolls, taxis, same. Now, if you live in an area where every month you're spending $150 on a train pass or something like that, you would include that in the fixed cost because every month that's how much you're spending for that. And so this is what I mean, where you have to kind of adjust these based on how you actually spend. Charity, I typically put within the fixed area because it's typically the same amount per month for me. But if maybe once per year you give to charity, you can put that in non-monthly cost. If it varies month to month, you can put that in the flex cost. Gifts should go in the non-monthly costs, in my opinion. Holidays come around once a year. Maybe you have some birthdays every once in a while, and so you want to count that for that throughout the course of the year, but it's not necessarily an every month cost. So now we need to clean up the flex, which those are good categories: coffee, restaurants and bars, groceries. We need to clean up non-monthly expenses. I keep travel and vacation in the non-monthly cost because we know we want to travel a certain amount of time per year. Entertainment, I move up into the flex, and personal, I move into the flex typically, and fun money, I move into the flex, and then pets, I keep as is, because that's typically a certain amount per year. We want to account for that for a year. Shopping, I move up to the flex. Clothing, flex. Furniture and housewares, flex. And you could move that into non-monthly costs if you were sort of planning for something big, or fixed expenses if you were planning for something that you need to save for a long period of time. Childcare, I move into fixed. And you're hearing this, I may fast forward a little bit of this just because of, for time's sakes, but you can get the understanding and you can kind of see what I'm doing here in order to get these categories down correctly. Student loans, that's a debt repayment. So I would actually move this into the fixed expenses, and I'm actually going to change this category into not just student loans, but debt payment, debt and student loan payment. Save. And so now, we don't need 1,000 categories here. Instead, we just want to know that the debt payments, whether it's a credit card, another type of debt, maybe a personal loan or something like that, and the student loans are being taken out from the fixed side of things. Education, I typically put that as a non-monthly expense for most people. If for some reason it needs to be a current expense, then we would move that into the either flexed or fixed, depending on how it's coming out. Medical, I changed to medical and dental insurance. Again, if this is coming out of your business, don't include this within the personal expenses. And then that gets moved up into the fixed. And then dentist, I choose mental and dental, health and dental care. We move that up to the flexes. We move that into the non-monthly expenses, typically because we know that we're going to go to the doctor for a variety of reasons throughout the year. We try to kind of pinpoint that amount and save every month for that. And then fitness, if we are a member of a gym that bills monthly, then we move that to the fixed expense. If we are a member of a yoga studio that we kind of go once or twice a month, maybe not, maybe so, then we would move that to flex expenses typically. We have that, and we'll only have a couple more categories to go. So again, loan repayment, it's kind of overkill with the student loan, but you can't really maneuver with some of these categories. So I would put that there. Financial and legal services, it just depends. If someone's paying me for financial services, I'm going to put that into fixed expenses because it's coming out of their stuff every month. If, say, you need a lawyer every once in a while for personal reasons, maybe you would put that in non-monthly or flex expenses. Financial fees, those change every month. Going to put that there. Cash and ATM, probably there in the fixed or the flex. Taxes, again, if you're paying taxes through your business, don't worry about taxes on the personal side. We're paying through the business. But if not, I put that in the non-monthly cost. And we'll talk more about insurances or taxes and insurances really in a future video. And insurance, like life insurance that may come out every month, I'm going to put in the fixed costs there. And then the only few other things. So we're going to change this uncategorized, and we're going to actually change it to savings, because where we want to place savings within this effort is right at the fixed level, because we want to be able to save a certain amount every month. You might not be able to do that yet. You're just beginning this process, but once you're able to, we want to make sure it's coming right off the top, just like our most important expenses. And then check, I typically put in flex expenses and miscellaneous into flex expenses. Hopefully there's not too many of those. And we delete that. Now, business expenses, not going to get rid of all of this, but we don't want to store business expenses in this process. That's a separate set of statements and set of bookkeeping. And so we want to keep these separate for our purposes. And then transfers are like credit card payments, stuff like that. We want to account for that because we don't want to double count that, which is what can happen if you kind of move these around. All right, I think that is everything. And so then what we will do is now we have three categories. We will go back to the budget section. And you can see that we now have the income that we make in a month. And we now have fixed expenses. It's this number that I'm worried about, this very top budget number. How much of our fixed expenses going out every month? It's $35.10. Okay, so this will track throughout the course of the month, but we know by the end of the month, $3,510 will be taken out. So when we are creating that system, we are paying our, say, checking account $35.10 for these fixed expenses. If some of these fixed expenses vary very slightly, say like the garbage goes up, down, a few tens of dollars, or one of the utility bills goes up and down a couple $100, well, then this will need to be adjusted slightly, but we would go to the higher level. So we're putting in a little bit more towards the fixed expenses in that case. And then here, I'm actually going to jump down to non-monthly expenses. Here we have non-monthly expenses. So these are the things that are going to come out, every once in a while throughout the course of the year. And this is really where the budgeting work begins. Because if we know for certain that this is about right, and we know we have $3,510 to spend here, if we can get our non-monthly expenses to a certain level where we are putting a certain amount of money each month towards them, then is the reason it gets its name. The flex costs kind of flow towards it. And our extra spending is kind of flowing towards that. And so I like it when I'm working with clients because we can just look at these top levels and say, is this working? Is this working? Is this working? Well, no, or yes, because, hey, we have a lot of money left over, or no, because we have no money left over and we need to adjust these and adjust this plan. And so let's begin to do this, because how do we develop a monthly cost for home improvement that comes around maybe once or twice a year? We have to break that down into a monthly cost. So let's say we want to figure out what we're going to spend on home improvement for the entire year, and we estimate about $3,000. What we'll do is do 3,000 divided by 12 here. That comes out to, I've done the math before, about $250 per month. And then we just kind of go through this line by line. So let's say pets, it's closer to $2,000 a year. That's about $167. We know we want to take a pretty big vacation maybe this year. And so maybe we'll spend about $5,000 with all the travel and whatnot. Okay, well, that we're going to budget for $417 a month. And so $417 of that paycheck is going to go towards travel and vacation every month. And so that way we're not surprised by anything down the line. Let's see, gifts is a big one. So we'll say $2,000 there. And you just kind of start filling things in and using your estimates for what you have and how you spend your money. So we'll just say, $150 here. And you can lean on Monarch to kind of help you with this, but also realize that Monarch is kind of taking estimates. And so you kind of really think about how you actually spend your money and how you actually go through the year. And if you have a car that's going to require a little bit more maintenance, maybe you increase that. Or if there's, if you're expecting a really big travel year because of weddings or something like that, maybe you're increasing that. So you just have to kind of think about sort of how you spend your money and what you expect in the year to come. But once you're done with all of this, you see you've done the non-monthly expenses, so you now know that this is about this month of each paycheck is going to go into the savings account. And when one of these larger bills hits, then you can just funnel it from that savings account. You should have your emergency savings there as well. And because none of these things happen all at once, right? So we're saving $417 a month, but travel and vacation may hit the third month of savings or the 6 months of savings. We're not really sure. But if we're doing all of this together, that one cost is covered and we should account for it in the emergency savings. And so we're protecting ourselves that way. And we have a little bit of backstop just in case something hits a little earlier than expected or whatever. And remember that like once that purchase hits, here it's going to say, hey, you spent $3,000 here. That's way more than your budgeting here. And so you're way over budget. But you have to realize that that's not the case because you're storing that money in your emergency savings and you have it covered there. So you're protected. You may need to delete the expenditure just for Monarch tracking purposes, but just remember to be proactive about that. And remember that Monarch doesn't have the capability of kind of tracking what you have in your emergency savings and why it's there or the purpose of it. So the fact that it's coming out from the savings account, it doesn't realize that. So it's just kind of keeping that budget amount. So just keep that in mind. But now what you've done is you've created your plan for the non-monthly expenses. You've created the plan for the fixed expenses. And so now you can just go through line by line. You still have so much more to budget here. So you can go line by line and kind of figure out what you can do. But let's say we want to add some savings into this mix. Well, that could dramatically change what you're doing, right? So let's say we want to add, $1,500 in monthly savings for between the 401k or an IRA or taxable account. It doesn't really matter. Let's just say all of it savings. Well, now we have $699 left to budget. Can we get through all of our things under budget? And let's see. So my guess is groceries. This person would likely spend more than $550 a month in groceries. Let's say it's closer to 1,000. And what does that happen? What happens to the budget then? Now we're getting close to that 250 mark, or close to that zero mark. We don't have to get it down perfectly to zero, but we want to get it fairly close, with $100, $200. So you can see how narrow it can get, especially once we've added savings into the mix. Let's say this person really enjoys entertainment, like going to like concerts or whatever. See, this is where that needs versus wants worksheet really comes into play, because now we can start going down the line and figuring out what needs and what wants need to be covered here, and maybe reduce the things that aren't so important. And so let's say this person wants to spend $250, let's say $200 a month on entertainment and recreation. That's great. That's something that they really love to do. That's fantastic. But that you may need to cut elsewhere, because restaurants and bars, that's really low. Now, I'm not saying you can't do it, but that's just very, very low for a lot of people. And let's say this moves up to $200. Now we're only $49 left to budget, and we haven't even gotten to some of the other things. And let's say this person likes to go to coffee shops. They spend about $100 in coffee shops, and you can see we are now at over budget. But that's where that needs versus wants worksheet really comes into play. And you can tell you're over budget because you're over here and you see the big red there. But it turns out that 250 clothing, that's not really how they spend. Maybe Monarch overestimated there, and they don't actually go clothes shopping at that level every month. So maybe we're closer to $100. What you can do is also estimate for the year based on previous years. So let's say like last year you spent $1,000, a month, or not a month, $1,000 a year for clothing, or let's just say $2,000 a year for clothing, just for ease sakes. And so then you would just do 2,000 divided by 12. When you're doing math like that, you just need to be careful, especially if you are just looking at 1 week time. So a lot of times people will say, okay, I spent $200 on groceries this week. That means 2,000 or 200 times 4 is 800 times 12, and that's the monthly or the per year amount. In fact, you actually need to take a different step, because there's not 4 weeks in a month. There's actually 4.3 days or 4.3 weeks in a month. And what happens is you count your expenditures by an entire month if you're accounting for that. So instead, we want to say, 200 times the number of weeks in a year, 52, and then divide that number by 12, because that'll get us a per month mark. That's more accurate. And so what we'll do is then keep going through this and say, okay, shopping, that's pretty low. Let's go 150 there, because, that could be like toiletries and things like that. But electronics, I'm not a big electronic person, and I'm actually may need to move that into non-monthly costs as opposed to flex costs. So let's just say it's $20 for right now. And so that moves that back up. And again, we don't need to get it down perfectly to zero, but we want to see a little wiggle room, but we just want to make sure we're accounting for things, And so you can also even add miscellaneous as sort of, or fun money as the addition. So let's say we have 139. Well, we can say, okay, well, we have $100 that we're going to spend just however we deem fit. And then that'll be pretty good. That gives us a little bit of a range. We have most of our money going towards specific purposes. And then as the month goes on, if we see we're completely underspending in entertainment and recreation, maybe we can forward some expenses. So we know we want to go to a couple of concerts towards the end of the year. That just happens to be when they hit. Well, we can purchase them now, so we're not double purchasing come the end of the year. And so you can sort of look throughout your year and kind of figure out when best to allocate the money in those cases. And what this does also is build in that savings amount, which is so important in this process. So that's really the flow-based budgeting technique. I hope you see the value in that, but really the next step is for you to really try it out yourself. There's a link to Monarch Money in the video notes. I don't get paid anything if you sign up. I'm not a Monarch Money salesman. I just think it's a useful tool for flow-based budgeting, which is why I bring it to your attention. And the other thing I would say is, as you are practicing, make sure to go to that school community. Tell me what's working. Tell me what's not. I will be there. I will be able to provide some guidance, but also there will be so many other private practice owners there, also going through the same process as you, also going through the same steps to build their wealth. And you can do this together. So you can throw ideas off to each other, see what's working for each one, and sort of troubleshoot things as well. So again, make sure to go to that school community, sign up. The courses that will follow are going to include managing your practice cash flow, tax planning made simple, paying off and using debt, something many of us have. How can we pay off, but also then use debt within our practice to make strides and build our income and a business even bigger. We're going to dig into understanding your practice finances. So similar to this, but we're really going to go deep into the income statement, the balance sheet, the cash flow statement, as well as some other ratios for you to be aware of, so you know that your business is operating at an optimal level, but also a safe level for you and for the future. And then the last course of videos right now is financial foundations for the future, where we're going to look further out and say, how are we going to save for long-term things, retirement, other protections that we might need in the business and in our lives. And so that's really what's next to come. I'm so excited for you for joining me on this journey, and please lean on that school community in the meantime. And as courses published, you'll know about them through the school and through my newsletter. Again, this community is only going to grow with your help. So please participate. Please share those wins. Please share those setbacks, because there's going to be a lot, especially early on. And so please be willing to share. And then also look out for weekly sessions in the future with experts. I talk with many folks in this space who, focus on marketing, who focus on coaching, who focus on accounting, bookkeeping, fractional CFOs, and everything in between. And we want to all grow our wealth Together, we all want to create a space for private practice owners to thrive and enable them to thrive. And so you're going to find weekly sessions eventually with these experts. And I would encourage you to participate in those as well, because you're going to learn so much and you're going to get kind of that MBA 101 or that business 101 that you never got to do via your PhD or master's program when you were becoming a therapist. So please find more of this at the school community. Again, recapping what we did, try out that Monarch Money, use the link in the video notes, really get started, see what works for you, see what doesn't, and then throw questions our way on the school community, where you should definitely join and let us know what's working, what's not. Ask questions. We're learning from each other. The more questions out there, the more the community is interacting, the stronger this community is going to be. And then shape that money mindset. We do not have to live under the perception that we currently have with money. We can change it. If we have a perception that we'll never make money, that can be changed. If we have a perception that we'll always be poor, that can be changed. We have perception that only bad people have money. That perception can be changed, and we're doing this all together. For more, make sure to follow that newsletter, thinkingcapfinancial.com/newsletter. You'll not only get more tips and advice, you'll get some updates on the school community as well. And then please, if this has helped you at all in any way, please send that testimonial. If you go to that link, thinkingcapfinancial.com/testimonials, there's clear directions on how you can create and send me that testimonial and potentially win a prize as well. I can't wait to hear how it's going. Please get started today. Let's go.